Nvidia earnings were perfect, but the stock dropped more than 11% after the earning was reported. What went wrong? Hi, I'm Dr. Howie. I'm a principal AI engineer. I treat investing like engineering, so everything we talk about here is data driven. In this video, we are going to explore Nvidia earnings. We're gonna see what went wrong with the earnings. In my opinion, there's nothing went wrong. They got triple beat, and at this point in time, Nvidia is the king. However, if there is something gonna go wrong in the future, what are the signal to look for? That is what we're going to explore in this video. And in addition, we are going to talk about, is AI a bubble? Why Nvidia just suddenly dropped out of nowhere when they got a triple beat. And in the very end, I'm going to show you the price action of Nvidia, where it's gonna drop to or where it's gonna go in the next month. So let's get to it. All right, so first we're gonna talk about the earnings. Nvidia earnings EPS wise is beat by 5%, right? And for the revenue that we see here that is reported on February 25th, 2026, the revenue is beat by almost 3%. And the triple beat come into the forecast of 2027. The first quarter by the reporter, it was expected to be 72 billion. However, they expected that number to be closer to 78 billion without any revenue from China. So they got EPS beat, they got revenue beat, and lastly, they got the forecast also beat. So that's triple beat for you for Nvidia. However, if you look at the stock was going kind of flat during the day, up only 1.44%. However, after the earning was reported, the stock spiked up all the way to $203, and it start bleeding out after it reaches that point at the $200 mark. And essentially after hour, it closed flat, where it's going nowhere in comparison to the start of the day, right? All right, so to make the matter worse, it was $195 during that Wednesday when they reported the earnings. However, in the past 2 days, right? So if we take the earnings day, that $201, and we extrapolate all the way to the end on the Friday right here, the stock actually down more than 11%, it's closer to 12%. So they this is very counterintuitive, right? Because when something reported really good earning, when a stock report really good earning, usually the stock follows, right? So if the earning is good, the stock is going up. If the earning is bad, the stock is going down. But this is not what we see in the Nvidia. Okay, let's look at the report. Let's start here. Record quarterly revenue of $68.1 billion, up 20% from Q3, 20% from Q3 to Q4. Usually, a company that is up 20% from the prior year versus the current year, 20% is really good. This is quarter to quarter 20%. This is extremely good. And on top of that, for the yearly return or revenue increase is at 73% from a year ago. So this is really, really amazing. And the record quarterly data center revenue of 62.3 billion, up 22%. And this is even accelerating, right? In aggregate, 20%, but only for the data center, it's 22% and up 75% from a year ago. For Nvidia, everything is about data center now. We don't care about the gaming segment. We don't care about the automotive segment, because data center revenue or the data center business is the biggest chunk of Nvidia revenue. So we want to pay attention to that, and everything else is just noise. To give you a perspective, the entire gaming segment for Nvidia is only encompass 5% of the entire revenue. So think about that. 5% is not as much. The thing that can break NVIDIA is the data center, and that is what we're going to explore or pay attention to in this video, right? So this is the fiscal 2026 summary. This is excellent report. The gross margin is at 75%. They don't spend anything on marketing and any kind of stuff, so the operating expense is really low. So with that being said, the net income gives you 63% net margin comparison to the revenue. This is extremely good. And if you see the year over year increase is at 73%, like we talked about, get this, the income increased 94%, right? So top line revenue is important. What's more important than the top line revenue is the income. The net income is essentially what makes the company going to be bigger or smaller based on the net income, right? Because you want a company to be profitable. If the net income is negative, that means it's not profitable. It's very positive, which is really good for the company. Now begs the other question, what are they going to do with their money, right? But that's another story for another day. Here, we're just going to see that 94% increase in the net income in comparison to the year before. Excellent. Excellent. All right, so for the gap for the year, right? So this is FY26 comparison to the FY25. For the year in aggregate, so what we look at over here is only for the quarter at 63% net margin. For the year is at 56% net margin, right? From January all the way to December. So this is really good. 56% net margin for a hardware company. This is really unheard for, right? And not only that, the increase is at 65%. Now, since the FY26 from FY25, the net income increases by 65%. I believe this is the most important signal to look for if the net income growth is going to compress or not, because in FY27 it's expected to grow the same rate at 65%. If that breaks, Nvidia stock is going to tank like no tomorrow. So this is the most important indicator. That's why we do this, right? This 65%. It begs the question that Nvidia is a $4.7 trillion company that acts like a small company that grows exponentially. So this is really unheard for. And we come into the territory of the law of big number. Usually the big number or a big company, they are very sluggish, but we don't see this in Nvidia. They keep growing as if they are a small startup company. At 65%, that is really hard to beat. That is consistently um, the growth at 65% that's consistent is very hard to beat. So for the next year, FY27, the question is the growth sustainable at 65%? If not, Nvidia is going to tank. I think that is the very first indicator. Even if the Wall Street or the investors see this go down by 65 to say 64, 63%, it's kind of the beginning of the game over, right? So they start, oh, the growth is decelerating. It's not as promising anymore. So we're just gonna dump. So Nvidia is already priced to the perfection, and they have to go beyond perfect to be able to get their stock up even more. So that is really important. Let's see what we have here. Okay, so the current P before the stock was reported was at 41. And after the projection for the growth, which is at 7.86%, right? So you see this 4.77%. If you multiply the same growth at 65%, you get 7.86. Um, so essentially, the EPS for next year, earning per share for next year is at 7.86%. And then if you use that divided by the current price at $177, 177 divided by 7.86, that gives you 22.5 p 4 PE, which is really good. 22.54 PE. That is one of the lowest of Max 7. I believe Tesla is at hundreds. 4P, talking about 4P, not PE, right? So that is something that to keep in mind. And then we look at here, like I said, the revenue is expected to be at $78 billion, where the expected was 72 billion by Wall Street analysts, and that is 8% beat, right, from the outlook or the forecast for fiscal year 2027. So, and also they continue where this is not assuming any data center compute revenue from China in its outlook, right? So if China start buying the Blackwell, for example, it's going to leads into the top line and more revenue for Nvidia, so which is really good. And I believe this by itself, where China has they the US is banning China to ban is banning China to get their hands into this technology, is one of the telltale that Nvidia technology is one of the top line there, right? Where the US is trying to protect the IP of Nvidia so that it doesn't go into China. And we are in a race of AI race with China. So if China wins by getting all of this technology in their hands, they're going to try to replicate it. If they try to replicate it, they're gonna have this technology for themselves, yada yada, or they're just going to buy Nvidia technology, and then they are going to surpass us in terms of AI race. So that's why we don't want that. However, in terms of Nvidia, they were kind of disagree um, with the development. So essentially, here's what happened, right? Nvidia is not going to just be a commodity. What they want is that all the AI infrastructure is using Nvidia. No matter where you at in this world, if you want to use AI, if you want to implement AI, it has to be from Nvidia. And they need to get the products so good that the infrastructure base is developed based on that, right? So if you have an AI algorithm, at the very bottom of the layer is NVIDIA infrastructure. And NVIDIA wants that for the world, right? Without that, NVIDIA is not going to be competitive. But when you start from NVIDIA stack, all the stack on top of it, without the bottom layer stack that is holding everything up for the AI infrastructure, the AI is going to collapse. What NVIDIA don't want is China producing this bottom layer. Instead of NVIDIA owning this bottom layer for the AI infrastructure, China is taking over this bottom layer and they start implementing their own stuff, right? So NVIDIA tried to essentially get China hooked into this their product so that everything starts from NVIDIA and the bottom layer, and then you stack technology on top of it. So that is the purpose of NVIDIA trying to get their product to overseas. All right, so highlights of the data centers, they're going to they unveil the NVIDIA Rubin platform. So this is essentially really promising in their delivery. It says 10%, 10x, not 10%, 10x reduction of inference token costs compared to NVIDIA Blackwell platform. So what that means is that for the inference cost, whenever you type in the chat GPT, I need a recipe to cook curry or something like that, right? That every time you ask ChatGPT something, it's called the token cost, right? It costs to essentially get you the answer by the ChatGPT. So 10x reduction cost of inference is huge. However, 10x reduction cost, that is just a relative cost reduction. They don't really tell you the absolute value. And the reason why is that my belief is where the 10x reduction cost, although it's huge, it is not enough to be profitable. Where every time you prompt something or you ask ChatGPT a question, is not going to be profitable venture for ChatGPT yet. So the reasoning why is that for these NVIDIA highlight is that in the future, if it's good enough already to get the inference token cost that costs less than what customer are paying for, they are going to put an absolute number here. So this is another key metric that we need to look at. 10%, 10x reduction cost right now is huge, but it's not important enough where ChatGPT or other LLM service like Claude, Anthropic, they're not profitable enough from this benefiting from 10x reduction cost. Okay, so that is something that we need to look at. And just a bunch of partnership with Meta. Blackwell Ultra delivers up to 50x better performance and 35x lower cost for agentic AI. Again, this 35x lower cost is, it's not an absolute value, right? It's not something that we can take that, oh, the AI is now profitable. It's not. It's not yet profitable. Okay, and then yeah, this is just reiterating what I say, the 10x with open source model of NVIDIA Blackwell, more partnership and CoreWeave partnership, open more than 5 gigawatts of AI factory by 2023. And I think this is a new partnership with Lilly to reinvent drug discovery in the age of AI, which is really good. They're trying to go into healthcare, and Lilly is a drug manufacturer. So, reinventing drug is one of the most important forefront of modern medicine. All right. I think more partnership, more products, NVIDIA Earth 2 family. I'm not sure if this in India stuff is going to pay off in the short term, or is it more like a long term thing? So more partnership in large or Nvidia, which is really good. Everyone wants to do business with Nvidia, and yeah, um, like I said, the number itself from the fiscal year 2026 is excellent, and the partnership was excellent, promising to see that the reduction cost in the inference token, all well, everything is good. So just to recap, two things that we need to look at, right? The first thing is if this reduction is going to ever be good enough to for this LLM company or the ChatGPT like company going to be profitable in the future, right? So that's one. And then the most important one is this 65% growth in the net income. And they sustain it. If they can, it's going to, the stock is going to tank like hell. Yeah, we can look at the forward PE, right? So the forward PE for Nvidia, like I said, is really low if when you get the number, right? In comparison to Tesla is at 293, the forward PE of Nvidia is very competitive. Let's just say it that way. Apple is higher, Amazon is higher. I think it was the we calculated it was lower than 26, I think, right? It was 22.5. So 26 might be overestimating in their part, which is fine. However, according to our calculation, it's probably on par with Microsoft at 23 and Meta at 22. And Nvidia is like in between Meta and Microsoft at 22.5. It's even lower than Google, lower than Amazon, lower than Apple. Right? So that is the comparison with the Magnificent Seven stock. This article right here, Nvidia earnings can buy a rally. Negative narratives have crept in. It says the growth deceleration. I don't think the growth has decelerated yet. However, it might in the future. So just something to look into, right? Like I said, that 70, not 70, 65% of net income, is that sustainable? If it's not sustainable, it's going to tank. I cannot stress that enough because that is one of the most important things. When Nvidia reports come out, that is the first thing that investor to look for. If there is less than 65% in the second quarter, just saying, like we're doing data driven here, right? So I'm not trying to say that, oh, it's going to be less than 65. We're going to monitor it. So competition, Nvidia doesn't have competition. AMD is nowhere close to Nvidia. Their AI chip is not as competitive. Also, do you remember like the AI infrastructure stack that we talk about? Nvidia is kind of irreplaceable. Irreplaceable. If you want to use AMD, you have to change the bottom stack that is stacking all the technology on top to make the AI work. The bottom chain of the Nvidia stack, as an AI engineer, I would say that is irreplaceable. Okay. Right. Risky commitment. Not sure. Yeah, this is the circular financing thing, right? So if one chain in the circular financing is weak and it's prone to break, then it could be lead back to the bottom line of Nvidia, and that is going to be risky. For example, at CoreWeave, if they do not deliver, then that's probably bad for Nvidia as well. So sometimes, like I would say, like Nvidia is better off without all of this commitment. However, without without Nvidia without Nvidia lifting all of the AI movement up, it's going to be hard for a lot of this smaller company to catch up or to use the technology. So it is one thing that Nvidia makes a lot of money, and then instead of reinvesting to the own company, Nvidia reinvests in AI as a whole, which I think is really smart. At the same time, it's risky. Limitation of the AI center boom. Yeah, like I said, for the for the chat GPT itself, if the customers just say that, hey, we don't really need chat GPT, the description doesn't give me the ROI that I would love to see, and if the chat GPT do not make their model stronger and stronger in the future, I think the limitation of the data center boom is going to creeps in, where people they're saying that there is not enough demand to support all of this AI infrastructure. If there's no enough demand, there's no bad customer that's going to pay for all this promise in the productivity increase, right? So for example, if you're a farmer back in the day, you work at a farm for 12 hours a day. With tractors, you might only work 6 hours, right? So if there is no productivity promise there that can make the consumer life better, then this limitation of the data center is not going to be as promising or not going to be used as much. Again, the circular financing, we talk about this. Lastly, we are going to look at the price action of NVIDIA. And if you notice that this 195 level is very important, it hits here and then it tumbles back down. And I assume it's going to hit here, this upsloping trend line anytime soon. And if you look at this upsloping trend line, it's been hit here, 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 right? Here, and here's where it broke, and it dated all the way back in what is this? July 2024. So this is a major trend line that coincide to this one and this one, right? And yeah, this is a major trend line to be broken. If it broke, then Nvidia has a lot more downward movement. So let's hope that support line holds. If not, Nvidia has a lot more to go. in the down direction. And this 195 line is pretty recent. So, in my opinion, this 95 line is a lot weaker than this upsloping trend line that dated back to 2024. As you can see, it when it hits here, and then arguably it also hit here. So $195 line is relatively weak. And my prediction is Nvidia is going to do something like this in the near future, all the way till early April, just ricocheting in between this region right here. Like I said, this line has been hit so many times, one, two, three, four, and upcoming five. If it hits, as the more it hits that line, the more it tend to leaning towards breaking down, right? And that is, although it's a really strong support, if you hit it so many times, eventually it's going to try to break down, right? Okay, and this is kind of like a weak line right here. If it goes up, it might overtake this 195 line and trying to test the all-time high again. Nevertheless, this is the price action right now. In the few months, I expect is going to go inside this line. And the reason why I say this is because that the partnership of AI is not as interesting or new anymore. There's nothing novel, right? For example, AMD can come out, oh, we got a partnership with Meta. At the time, it was like, oh, that is a really good partnership. As you do this more and more, NVIDIA partnership with Oracle, NVIDIA partnership with this guy, NVIDIA partnership with that guy, it tends to get old and it was like, okay, what's new, right? So essentially, I don't see there's a really big news other than China start buying shitload of Nvidia GPU that will break to the upside. However, for the downside, there is more risk towards it because the Nvidia is priced to perfection, and downside is a tendency of the stock price is going to go, in my opinion. And like I said, there is not going to be a major news anymore in the month of March, April, and the next earning is in May 20, the end of May. So until the next earning, there's nothing really excited about Nvidia that I can see that is going to break to the upside or break to the downside. So it's just going to stay in that range. That's all I have for today, and I'll see you in the next one.